Welcome aboard. We're getting all set up here for the trading morning. Welcome to eMini tradealong.com. The eMini tradealong.com part is a direct entry into our Zoom. Come on in. We're here every trading day slugging it out, looking for a trading advantage, trading business. If you need trading software, let us know. Check out our charts. It's a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini, and a 30-year bond chart. Been a nice group of people in here on a daily basis, slugging it out. If you're a new trader, we can help you get set off on the right foot. We can point you in the right direction to get a trading platform in charts. If you're looking to trade and trade somebody else's money, in other words, become a good trader, a disciplined trader, and be able to trade somebody else's money, we can point you in the right direction for that opportunity. So we can help you get set up to trade on your own. We can help you get set up to be able to trade somebody else's money. We also have the ability to teach you how to trade better. Let's say you're a new trader, we can set you off on the right foot, teach you a price action trading methodology that you can put to use, and we can support you in that methodology as you are joining us in this trade along on a trading day basis from the hours of 9 a.m. to 11:30 on a trading day basis. Hey, Philip, how are you today? Paulie, Mauricio, Quasi, David, everybody else, good morning. Well, that's great. We get a lot of nice referrals from individuals out there. Saul is a veteran trader of the trading pits in Chicago. Spent 25 years down there, 25 years plus. He's a very straightforward, very much a trader to his core. He's able to chew gum and walk at the same time. In other words, he's able to trade the market, which he does. So he's at risk. In other words, he puts his money where his mouth is. And then he's able to work with traders on the fly in a trade along environment, which I think is pretty cool and pretty unique. You'll pick up pretty quickly that he knows what he's doing. You'll pick up pretty quickly that he's a person that could quite possibly help you, whether you're a new trader or an experienced trader. You'll pick up pretty quickly that he's the man when it comes to, like, when you're talking in a chat room setting, a lot of times what happens is you get spun out by people that have no idea, or spun up by individuals that may mean well, but they have no business working with people on trading or in trading or about trading. This service, the individual that you're working with is an experienced trader, is at risk, is trading based on the same price action concept, and he's also looking to give himself a trading advantage and give you a trading advantage from an educational point of view only. An advantage by laying out key levels that are important levels for this morning's trade. And I would say that in the trading parlance, right, there's a lot of different techniques and opportunities. One of them is levels. People talk about time frames, various spoon-fed levels by software, calculated levels. I think it's important for you to know as attendees in this service, or as you may recommend this service, is that Sol's levels are different in most cases. I say that because every once in a while, you know, it could be around the same level, but he gives you a pivot, his proprietary pivot, and other levels on top and bottom of that pivot. And he does it as a trading advantage to him and to the exclusion of other levels out there, the standardized ones. Now, just visualize this for a second. And this, I think, is really important. Is that we are coming to the screens today to do our business. We're waiting for the opening bell, which is in about 5 minutes. At that opening bell, there's going to be a rush of activity that comes in the market. That rush of activity is coming from traders like yourselves. And if you can visualize how many traders out there are, drinking their Fireball and they're getting ready to jump into the market, they're using, quite frankly, software systems, software platforms that are spinning out all sorts of information, and they're spinning out while they're trying to use it. They're mentalizing on it to try to make it their own. Meanwhile, what's happening is that they're getting trapped into a stampede. And it's causing them to have trading losses. Trading losses that they're not even aware of, that are, in my opinion, are happening based on rushing in, based on all the sort of psychological push from standardized software. So what's the difference here? Like, what opportunity is here that you may not find elsewhere? Well, really is it Sol, based on his experience and the concept of price action and the entries, exits, and stops, and how to execute those entries, exits, and stops. But what's really interesting here is Sol's levels. Now, Sol's going to come to his screens. He's going to lay out levels for today. A pivot, he calls it a pivot. And other levels on top and bottom of that pivot that he calls support and resistance. Now, there may be 5 or 6 or 7 at the top. There might be 5 or 6 or 7 at the bottom. These levels, you should write them down. You should learn to load them in your software. And then it's a matter of the activity today based on the action of price at the opening bell and beyond, and the interaction of price in the S&P 500 E-mini and Sol's levels. Now, you can be a witness to see if Sol's levels are any good. In other words, you can make a value judgment that Sol's good at what he does, and he can help you based on being your wingman for today's trade and tomorrow's trade. And the levels that he gives out are pretty darn good levels, and they're helpful in your trade. And then it's the entries, exits, and stops, and the whys, and the feedback that you get based on your relationship with Sol. That's it in a nutshell. 2, 3, 4, 5 trades possible. Looking for a minimum trading profit on 2 points plus possible. And the ability for you to execute. And then come for help based on that execution. How did I do? You could have done great. How could I do better? How could I tweak it up? And it's interesting because we get a lot of traders that are pretty darn close to making money on a consistent basis. We started with new traders, great. Intermediate traders. Then we got traders that have been doing it for a while that are pretty darn close. Well, based on Sol's coaching and his interaction with that individual, he can help them turn around to become a pretty darn good trader by tweaking their trading plan, by tweaking what they're doing. Small changes can bring big value based on the opportunity. So I'm going to post the wheel of opportunity.
All right. Good morning, everybody. Now. Everybody hear me all right? Yeah, can everybody hear me all right?
I hear you, Sal. You're good.
Okay, good. Well, we had the CPI number that came out, so you can see a little volatility that it was injected into the market. Let's give you our levels here and be a little bit mindful of that as we trade. Our pivot this morning is 4407, 4407. Support below at 4398, 4398, 90, 82, 74, 65. Resistance on the upside at 15, 24, 35, 44, and 52. Pivot 07, support at 98, 90, 82, 74, and 65. Resistance on the upside at 15, 24, 35, 44, and 52. All right, we've got a little volatility here injected into the market because of the CPI number. As you can tell, in addition to that, we have the beginning of the two-day Fed meeting. As we come back quickly up here to our 07. Now remember, we have a little bit of an injection of some volatility here due to the CPI numbers. So we've been very slow lately, so you have to be a little bit careful here of the volatility. So consequently, probably at least for the morning, at least until things settle down a little bit, probably expand your stops here to about 3 to 4 points instead of 2 or 3, only because of the increased volatility with the CPI number. Now, the CPI number, they came in, they were expecting the headline number, expecting 4.1, came in at 4.0, so a little bit better than expected. Previous was 4.9. Kind of fits in with the expectation that the Fed is going to pause or take a breather this tomorrow when they release their what they're going to do as far as interest rates. And the core, though, was 5.3, which is exactly where they were expecting 5.3. So we rallied right back up to our pivot there at 07. If you were a little aggressive there and you wanted to maybe get a little bit short there based on the rotation there of the market, it gave you a chance there to get short against our pivot. Again, welcome some of the new folks that are here. We're quickly coming back down here to our 98 area. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we just gave out and any price action opportunities. The price action opportunity was the rotation back up to the pivot there at 07. We have those price action opportunities that occur with volatility. We usually have to wait till the market paid some bars to give us those price action opportunities, but due to the fact that we are got some injection of some volatility this morning, we had a nice quick rotation there. Now we went down right to even and popped back up there. So again, we have 98 there, so be a little bit careful there since we did not get the 98. Be just a little bit mindful of that. We just got down to even, probably even till 99. Should have maybe had the 99 in there. So be a little bit careful with the 98 if you're trading. It was moving around quite a bit this morning, and I usually take the safer level, but sometimes I miss them by a little bit. Anyway, so be a little bit careful there against the 98 if we come rotate back down to it. Would have liked to get it on that quick rotation, but it was a blue band. A blue band was right there at even. So in case you were trading our blue band, again, another price action opportunity. Maybe you were able to buy them there, and you would have had to probably scale in with the 98 as well if we did rotate back down. So again, we are looking for scalping opportunities. Like I said, when I said at the beginning, we have to expand our stops a little bit to about 3 or 4 points right now because of the extra volatility that will keep us in the game here with the injection of this vol. At least in the morning, I think things will settle down, especially with the FOMC stuff tomorrow. And they begin their meeting today, and we'll release the results tomorrow. So we'll see, what that brings. It's always some volatility there, and hopefully, we are not going to be trading around that time. So again, we did have our little catch there at the blue band there. If you were looking for that, some of our traders like to trade the blue band. The blue band, for those of you who are new here, is just a Bollinger Band, but we've incorporated into our into our work that we do, some methodology that we have. There's certain times when we use it, certain times when we don't. Obviously, it all depends on what the market's and the price action at any given moment in time. So, welcome to some of the new folks that are here. I see if you have any questions, feel free to ask in the chat. We don't mind questions here. Obviously, when there's some volatility and some movement, I'd rather talk about the market, and at least we got that here this morning versus me just talking about nothing. So that's a good thing. All right. So now we're upticking here a little bit. We're looking on the upside there at the 15 area. That's our next opportunity there for us to see if we got anything going on. The rotation up to the 15 is where our next level of resistance is. So that's where we're at as far as our next opportunity here. Again, we're looking to take advantage of ebbs and flows of the market. We don't believe markets go straight up or straight down. Consequently, we're looking for those areas that will give us scalping opportunities. And like I said earlier, right now we're looking at about 3 to 4 points, and that could vary. We've been 2 or 3 points, trying to get 2 or 3 points sometimes, as the market hasn't been even, giving us those opportunities lately. But today, with this release of the CPI number, the volatility is injected into the market, and we have some opportunities. We also try to scale in around an area. Those levels are areas. They're not so much, we're not going to be perfect is what I'm trying to say here. So those levels are areas. We scale around those areas to give us our opportunities to find the trades that we're looking for, or at least trades that we are thinking we are going to scalp around, I should say. All right, so good number there with the CPI number. All right, we got up to about the 11-12 area and coming off here a little bit. Again, make sure we understand that there's some head volatility. Look at the bond market all over the place. They've sold off a big time yesterday. The yield on the 30-year was at 65 or 70 yesterday, and went up to 73 on the 10-year. So we have the FOMC meeting begins today, ends tomorrow, with the results coming. The market here rotating back down here again. Kind of missed our entry point there, but this time it's a little bit longer. But be careful there on the rotation back to the 98 area. It's a lot riskier right now that we did not get it the first rotation down there. So CPI number is the only thing we got going there tonight. With the Federal Reserve determining to bring down inflation, May's consumer price index to be released this morning, which we talked about, will give bankers fresh data on how much progress they've made in the mission to combat price pressures. Year-over-year rates have pointed in the right direction. The CPI number coming in smaller each month since the figure peaked at 9.1% in June of 22. Yeah, I can't believe it's been a year of inflation. It's pretty amazing. The report will come out just as FOMC begins its two-day monetary policy meeting, with the rate decision and dot plot announcement coming later on Wednesday, tomorrow. Again, we do not like to trade FOMC stuff, Fed stuff. We stay away from Fed stuff. Too volatile, especially for individual traders. A lot of those algorithms take over, and they just kind of control the market. We don't have the quickness or capabilities to be able to trade that quickly like they do with those algos that they got going when those numbers come out. All right, we did dip back down to our pivot in case you wanted to have a little bit of a buy there. take care of this, take advantage of this bounce off at even. Now we're coming up to the 15 area. Again, the pivot is doing its job this morning. First initially on the sell side, and then a little buying opportunity there again, depending on how aggressive you want it to be. Everybody here has different risk tolerances. There's not one right way or wrong way of trading. You have to understand that here everybody trades at their own, what trades they find, what trades they see, visualize, and then they kind of trade off of it. If you did buy the 07s there, again, that is another price action opportunity. Those price action opportunities are there for us. I talk about them in our coaching classes that we have, and all of those trades also depend on each individual's risk tolerance and how much risk they are willing to take. So I don't mention those all the time. As we come up here to our 15 area, we're getting a little bit of a rotation here against it. If you were long there, this is definitely where you wanted to take some profits here against the 15 area. And bonds here now come back to the downside. They're afraid of some, afraid of a increased rates. I don't know. Maybe I don't know. The bond market's been acting very strangely lately, so I can't even try to explain what's going on there. All right, we've come down here again. If you traded the 15 level this time, you got the 15. It traded just above it. You get a nice little bit of a rotation here against it. Again, take some profits along the way, especially if you're trading multiple contracts. Have to peel some profits off and keep whatever leftover you have, because the markets are a little bit whippy. And they can definitely, as you can see here, I was going to say erase any profits very quickly. So you want to take some profits off the table if you have the opportunity to, especially when it's whipping around like it is. If you have, I think anything above the 16.5 area there, you want to be out of any shorts. But nice rotation there against the pivot there on the downside, and then quick pop back up here to the 15. Got a little bit of a rotation there. Almost got us our 3 points. But again, like I said, you definitely can take some profits along the way. There's nothing here that says that you have to keep your stop in place and keep your profit target and not adjust those. Okay. I mean, that's not, you're trading, you're looking for opportunities to trade. You're also in and out of the market. So you're going to have plenty of opportunities to get in and out of the market, and to just keep your stop in place when the market is, when the price action is dictating or telling you something else. It doesn't make any sense. All right. You have to look at the price action. You have to understand what's happening in the market at that moment, and trade it accordingly, not just put the order in and forget about it. I mean, you could at certain points, but we should say here above 16.5, you want to be out of any shorts. It also could be a buying opportunity for some of you. If you, again, the market was telling us that above the 16.5 was a buying opportunity. That's why I mentioned that we are out of any shorts at 16.5. So again, if you did sell the 15, you could made the adjustment like I just did there, and it said above 16.5 out of any shorts, or you could have just bought the 16.5s based on the fact that it was a buying opportunity. So we don't only just counter trend the market like some of you feel, but we also have buying opportunities, and that was a perfect example of a buying opportunity there. And again, everybody here trades differently. You have to take what I say and kind of disseminate it and understand what I'm trying to say. And anything I say is also taught in our coaching class that I have. So it's not a secret. But at least I'm talking about trading. It's better than what I've been talking about lately at work. For those of you who are new here, it's been so slow, very tough for me to talk about nothing when the market's trading in a very narrow range. So a little buying opportunity there above the 16.5. You saw it pop up there to 21.75. We obviously were looking at 24. And coming back down here, a little support right now would be around the, little support would be around the 11 area, better support would be probably about 05, 07 or pivot. Again, if anybody has any questions, please feel free to ask in the chat. Let's see, the CPI number is expected to slow down to plus 0.2, came out at plus 0.1, increase in May from its 4% advance in the previous month. The progress looks even better year to year. CPI expected to moderate to 4.1 from 4.9, and I say that was, it came in at 4.0. So that was pretty good as far as that was the year to year, right? So they were looking at full, and that one's harder to turn over, right? Okay, so that one, though, those are good numbers. The core, though, kind of stayed the same. Fed officials prefer to look at the personal consumption expenditures because that takes into effect the changes consumers make in response to higher prices. For example, people may trade down to store brand products rather than remain with higher price name brands, while the CPI measures the prices in a set of basket of goods and is a solid metric in terms of categories. The PCE measures what consumers are actually spending. However, the PCE report for May won't come out until 30th, meaning the Fed won't have that data this week to incorporate into their view of the U.S. economy. Are we trading off here a little bit? Again, you can see the volatility here has been injected. We had a little resistance up at the 24. Again, if you were a little aggressive, maybe you're looking at the, I said 7 area, but better at 5 to 7 would be better support. 11 if you're a little aggressive. And patience is very important.